Nigeria's latest inflation figures, while year-on-year, month-on-month, continuing to climb. There's the headline, 25.8 from 24.08 in July. Food inflation, look at that, 29.3% from 26.9. Core inflation, stripping out the more volatile items, 21.5. Across the board, inflation rising, urban and rural, 27.6, 24.1 respectively. On the month-on-month front, still the same story, 3.18%. We're heading to 4% for food inflation, 3.87. Core inflation, 2.18, 3.2 for urban and rural inflation high as well. Clement Izu, head of research at Financial Derivatives Company Limited. He joins us now to discuss. Clement, you're very welcome. Good afternoon. Look, on as far as a real rate of return, I want to ask you about that. If you take the latest treasury bills, whatever you want to take and subtract it from, or subtract inflation from that, you get a negative real rate. So
in double digits.
In double digits.
Yes.
So what does an investor do? I like that you're scratching your chin to get the answer. Lord.
That's a very big issue for investments. We're even talking about the numbers that we know. But it's also important for us to even note that the biggest problem is the issue of data integrity. Are we even sure that where we are is where we should be? Because anecdotal evidence based on the commodities that we track is even showing us 45%, right?
Wow.
It's just like what we've been doing around the exchange rate,
yes.
External reserves,
yes.
you say, moving average of gross external reserve, and it's been above $30 billion for the past 7 years.
Yep.
Only for us now to begin to say, it's like it's not even up to $4 billion.
Right,
and then that's because the value of data is accuracy and trustworthiness. In fact, there's this American professor, Edward Deming, who said, in God we trust. All other things bring data, right? So when you bring this data, and this data is not accurate, it affects decision making. Now, coming back to the issue of negative real rates of return to investment and savings. For if you weigh it on investment for the past year, it means we have negative rates of return. The 1-year treasury bill is 12.55.
Yep.
Now we have inflation numbers at 25.8. That's above 13%, right?
Yep. Well,
negative.
Negative. Yeah.
Good.
Yeah.
But that is for the past year.
Yeah.
If investor bringing in money today is looking at inflation for the future.
Right.
So if you look at the future, if we analyze this August inflation, it's 46%.
Wow.
So if you net 46% from 12.55, you have above 33%.
Gosh.
What it means is that if I invest 1 million naira, I'll lose 330 for investing that money.
Wow.
I lose money by going to bed.
Yeah.
So that is why most countries, especially advanced economies, they know the key to economic development is stable prices. If you have inflation, here we want to pursue growth, you can't do all on the same plate.
Pick one. Pick a
you
struggle.
You have to prioritize that. This is what we want. We want stable prices. If you get stable prices, you get growth, you get employment, and every other thing. And so we must begin to focus on priorities. We must get price right. Because where price is today, Nigeria is one of the highest in Africa. And that is not good for investment.
Okay, so one of the highest in Africa, not good for investment. What about the average Nigerian on the street? What is this? I guess, are they more squeezed even more?
The average Nigerian on the street is living on edge.
Wow, yeah.
To be very frank. For the guy receiving a minimum wage of 30,000, the value today is less than 15,000. We're not talking about the exchange rate, because if you take it to dollar, it's about $33. And every day these prices are rising. So if we use our market evidence of 45% increase in 1 year, it means that the man out there is already in waters. And that is why we are seeing, growth is one of the things we are seeing based on the markets we are tracking and the household we are tracking, is that we are having very rapid urban exodus. People are moving back to the village. Those that have their kids in private schools are taking them out of private schools. In fact, some are even rationalizing us, okay, out of my 4 kids, who will be in school and who will not be in school?
Wow.
So it's really biting to household. And government must take this into account in terms of policy making.
Speaking of government and policy making, poverty, and I want to ask you about the impact of inflation on poverty numbers. The World Bank estimated that, okay, there are the figures, 5 million people pushed into poverty in 2022. Between 2020 and 2020, they said 8 million. Both the last president and this president both have said they want to lift 100 million people out of poverty. How can you do that when you got more people falling into poverty from inflation?
You know, that's why we began to have this conversation based on data integrity and availability and timeliness of data too. Does Nigeria in itself know how many poor people they have?
Right.
Right? Okay, we have had the multidimensional poverty that said 133 million. If you go to World Bank poverty clock, you see 71 million extreme poor. Yeah. Does Nigeria have a poverty matrix where they say, based on these factors, these people are poor? Yeah. Based on this factor, these people are poor. Gotcha. If you because let me tell you what surprised me some. That was early this year when I went to the World Bank poverty clock. I discovered that in a minute, 0.4 persons enter poverty globally. Gotcha. So that means that in 10 minutes, only 3 people enter into the poverty trap. In Nigeria, in a minute, 2.5 people enter into the poverty trap, right? Yeah. That means in 10 minutes, you have 25 people entering poverty. That's before the policy change. Yeah. And now we're saying policy change is pushing people into more poverty because you're having income eroded, you're having cost of living crisis. And with all of this, the estimate of 8 million is conservative, very conservative. Yeah. We expect that more people are going to be pushed into poverty. And I tell you why. Government removed subsidy, devalue the exchange rate, raise the cost of living, and more importantly, the custom duties, right? In all of this, our estimate is showing that in a year, both firms and households will lose about 21 trillion. Wow. But what is government returning back? 500 for businesses and 180, which they gave to states for households. Yeah. That is 680. That's 0.3%. Yeah. So you take out 21 trillion, you bring back 680.
So you're not returning anywhere near what you took out.
And the circular flow of income says the only way you can have stability is that the income that goes to this unit comes back to this unit. So now you have income moving from household, from firms to government is trapped. It's not coming back to them. Right. And that is why you see the businesses are squeezed. Because once the households are squeezed, the businesses are squeezed. Because the turnover is down. If you have money, you raise your demand. If there's no money, you cut your demand. Yeah. And businesses will bear the brunt. So you see that the pain is going to escalate. Yeah. Except government, the problem we have, Rotus, is this, and that is the problem I have with policymakers all of the time. Nigeria comes out and said, oh, we want to close border, we want to be self-sufficient, and we want it now. Yeah. China says, by 2025, we don't want to use petrol-powered vehicles on our road, we want electric vehicles. They didn't start today. They projected and they begin to invest into such infrastructure, such technology, such, in order to get there. Yeah. We start today. Yeah. So we just wake up and say, oh, subsidy is gone. It's very good. It's policy pronouncement. But the question is,
did you make the investments to get there?
To deal with this. Right. Because there are consequences. Every policy has, and that is why public policy is very key. And that, I think that's what we are missing in the basket. When we are making policy, once you say, I want to do this, there are 1,001 other things it's going to affect. It's positive. The outcome for this is positive. But it's going to have also negative impact on other variables. So you must bring all of them into a basket and begin to find out, how do I tackle this, that it reduces or moderates the impact on other variables to ensure that this positive outcome is not swallowed by the negative outcome around. And so that is very, very key in public policy.
This is why you are the head of research at Financial Derivatives Company Limited. This is why we enjoy bringing you on the show every single time.
Rotus, the issue is every day you look at the numbers, what the numbers are saying, you get crazy, right? Because of today, it's become even more difficult to look at what happened, that we are declassified, right? From frontier market. So how can you be the largest economy in Africa? You are not even in the frontier. Because Frontier is the gate to emerging market.
Yeah.
And now we are now nowhere.
You're talking about the FTSE Russell, right?
Of course.
Yeah.
Why? Because uncertainty.
And lack of transparency.
There's no transparency. So
Yeah.
if you say, oh, bring investment to Nigeria, bring investment. If I bring my money and I want it back, can I get it?
No.
What value can I get out of it?
You're not even able to repatriate your money out of the country.
So we must begin to deal with those issues of transparency, issues of accuracy of data. And timeliness of data, so that data will now be used for actionable insight and informed decision making.
Clement Izu, Head of Research, Financial Derivatives Company Limited, thank you so much for your time. Really appreciate it.